Investing in property can be life-changing. It's a journey full of potential rewards, but like any journey, it has its ups and downs. Think of it like the ocean. The property market has its own tides, its own rhythm. These are the property cycles and market trends we're going to explore. Understanding them is key to navigating the exciting world of property investment. Knowing the cycle helps you make informed decisions. It's about buying at the right time and selling strategically. It's about maximizing your returns. We'll break down these concepts into simple terms. Think of this as your guide to understanding the language of the property market. Let's dive in. This journey is about empowering you. It's about giving you the knowledge to invest wisely. Together, we'll uncover the secrets of property cycles and market trends. By the end, you'll feel confident taking your first steps as a property investor. Let's get started. Imagine the property market as a wave. It rises, it crests, it falls, and then it rises again. This is the essence of the property cycle. Understanding this cycle is crucial for any investor. It's about knowing when to ride the wave and when to prepare for the dip. There are four main phases in a property cycle: expansion, peak, contraction, and trough. Expansion is like the wave gathering momentum. Demand for property grows, prices climb, and it's a seller's market. The peak is the highest point of the wave. Competition is fierce and prices are at a premium. Contraction is when the wave starts to recede. Demand cools, prices soften, and it becomes a buyer's market. Finally, the trough is the bottom of the cycle. This is when the market is at its quietest and prices are at their lowest. Understanding these phases helps you make smart choices. Buy during a trough or early expansion, and you could ride the wave of appreciation. Sell at the peak, and you'll capitalize on high demand. But remember, timing the market perfectly is tricky. It's more important to understand the general cycle and make informed decisions based on your individual circumstances. Property cycles give us a broad view, but within those cycles there are always smaller waves, shifts, and currents. We call these market trends. They are the nuances that can impact your investment decisions. Think of it like this. The property cycle tells you the tide is coming in. Market trends tell you the direction of the current. To spot these trends, you need to be observant. Look for clues in the data. What's happening with interest rates? What's the population growth looking like? What about infrastructure development? These are all indicators of where the market might be heading. In New Zealand, we are seeing some interesting trends. Urbanization is a big one. More people are moving to cities, creating higher demand for housing in urban areas. Infrastructure development is another one. New roads, public transport, and amenities can all impact property values. And let's not forget demographic shifts. An aging population or an influx of young professionals can significantly influence the market. By understanding these trends, you can make smarter investment choices. You can identify areas with high growth potential or capitalize on emerging markets. It's about being ahead of the curve and positioning yourself for success. Now that we understand the rhythm of the market, let's talk strategy. Seasoned investors have weathered many property cycles. They've learned valuable lessons along the way. Here are some of their top tips. Play the long game. Property investment is a marathon, not a sprint. Don't expect to get rich quick. Focus on long-term growth and steady returns. Do your homework. Knowledge is power. Research the market, understand the trends, and analyze potential investments carefully. Location, location, location. It's a cliche for a reason. The location of your investment property is paramount. Look for areas with strong demand, good amenities, and potential for growth. Cash flow is king. Ensure your investment property generates positive cash flow. This means rental income covers your mortgage repayments and other expenses. Don't be afraid to seek advice. Surround yourself with experts. Talk to mortgage brokers, real estate agents, and property mentors. Their experience can be invaluable. Remember, property investment is a journey. There will be ups and downs. But by understanding the cycles, spotting the trends, and following expert advice, you can navigate the market with confidence and achieve your investment goals.